Welcome to another day in the Matrix. This is a Red Pill Podcast 148. Hope you're all having an amazing weekend so far. It has been a very interesting week in these markets across the board, so we have a lot to cover today. We're going to also be recapping what's been going down in the stock market since we've had some new all-time highs across the board, and crypto market settling out since these ETF approvals on Bitcoin and what it's done to the overall market. We have a lot to get into, so without any further ado, welcome. It's so great to have you here with us. If you're new to the Wolfpack, make sure to send me a direct message on Patreon with your Discord username and the last four numbers after your Discord username, and I will reply back to you with a Patreon direct message sharing the Discord server invite. Please do not comment below or email me trying to get Discord access. I won't be able to help you that way. Also, doing amazing with our altcoin voting system this week. Since we are covering some stock market indices, we will be trying to get to at least 4 altcoins additionally on top of Ethereum and XRP, as usual. So we'll be checking out Near Protocol, Sologenic, Quant, and Nakamoto Games, which I believe that'll be my first time ever going over that project. So exciting episode today, and another quick update. I do have the Year of the Dragon Decoded prepared. It will be releasing here on Patreon for the Mastermind community in just a couple days. I'm aiming for February 1st as the release date. This is going to be one of the most packed with Gnosis decodes I've ever released, so stay tuned for that. Like last year's Year of the Rabbit decode, this decode is going to reveal how I see this year playing out on the world stage in all aspects. So it's going to be covering pretty much everything, all of the symbolism of all the key things that I've been talking about for a while now, but it will be simplified and compact into one comprehensive decode for all of you guys. So it's going to be probably double the amount of information that you got on last year's Year of the Rabbit decode, and I know many of you will appreciate that. And since it's kind of giving us an overview of what I'm seeing for the full year, and this year just got started, I think it's going to be one of my most valuable decodes that I've ever released. And for those that are interested in sports, absolutely, you will be able to use this decode I'm about to release for instance, the upcoming Super Bowl and any other sporting events throughout the year. So just wanted to let you all know that that is going to be released in a couple days. I'm really excited to get that one out to you, and stay tuned for more updates. So we just had the full moon a couple days ago on January 25th with Bitcoin planting a local bottom for our current microcycle on January 23rd, just a couple days before the full moon. And now that we're about 3 days out from the full moon, we can see Bitcoin has bounced to right under 43K as of today with a rejection, and I'll show you exactly where that rejection level was. It's something that I teach in my Crypto Mastermind course, and that is this 55 simple moving average. So we're just going to be kicking this one off right away today with as much information as possible. If you're new to TA and you need to sharpen your skills a little more, because some of the concepts we're talking about either in these Red Pill podcasts or in my YouTube videos are a little bit complicated, don't worry. I do have a comprehensive course covering all of this information, breaking it down step by step. It's called my Crypto Mastermind course, and as a Patreon supporter, you get the best discount available on that course, and that information for a discount code will be right below this video. And another quick update, actually, because I spoke about this in my last live stream that I did yesterday. I will be revamping some of the material within that Crypto Mastermind course. So if you purchased it in the past, no further action is needed. When the time comes, maybe about 4 to 5 months out from now, I will be adding in some new information, and it will be added automatically, so you won't need to do anything else. And as promised, it is a one-time payment for lifetime access. So whoever got in the past, you're still here. Nothing's going to change. If anything, I will add more stuff over time, or I will edit some of the sections as needed. But it's over 100 videos, and about 85% of it is all technical analysis, so it's not needed to be adjusted or changed no matter what year we're in, what cycle we're in, what project we're talking about. It does not matter because TA is TA. It is timeless. Similar to how I use Wyckoff method. Richard Wyckoff passed away over 100 years ago, and his methodology is still working to this day. His strategy is still working to this day with stuff that was created after he died, such as crypto. And that's kind of the main focus here on the course. It's 85% of the material is mostly timeless stuff that will never change. The same thing with the exit strategy blueprint, which is included within that course for free. That gives you even more value for that crypto mastermind. And then the other material is mostly bonus stuff, or it's kind of step-by-step introduction material, getting you signed up to exchanges and that. But we're all aware this is a nascent asset class. It's moving very quickly. There's exchanges popping up left and right all the time. There's liquidity issues. There's always going to be change in that regard. But TA is TA. And that's what you're getting with that course. You're learning how to go from beginner level to intermediate advanced in technical analysis. So again, I know some of the times when we're going on our stream of consciousness when it comes to TA, it could get a little confusing, and that's where considering to invest in yourself by getting that crypto mastermind, especially if you are a Patreon supporter and you're already getting 25% off lifetime access to that course, that could be something to consider, especially since by getting in now, by the time you go through all the material, about half a year down the line, I will be adding in some more stuff to consider, just bringing as much value as I can. That's really what I want to do this year. So let's get back into this, but I have this technical move playing out. We've already broke this down, how when we get a wolf cross of an 8 simple moving average cross below the 55 simple moving average, it has downside implied, and it's typical to have bounces along the way. So we get a little bit of a bounce and we get rejected perfectly at this level today. Now, a quick reminder, crypto is trading alone right now. So we have the CME opening up a little bit later today. We have a weekly closure coming in for the crypto market. So some volatility could be happening around the time that the Dow Jones opens up, and Forex and precious metals. But needless to say, we see this week after week, but we don't see these crosses too often. For instance, the last time that we got this wolf cross with upside implied was over 100 days ago, and it took about 109, 110 days for it to cross to the downside. But I want you to notice something. I'm going to turn off these 200 moving averages just to give you a chance to see this clearly. Watch how when we got the wolf cross with upside implied, where the 8 crossed above the 55, we actually bounced on the 55 to trade it as a support, to basically retest it as a support. Okay, so let's just quickly summarize what this is. It's kind of like a beginner TA lesson for everyone. We have the yellow moving average as the 8 symbol, and then we have the 55 as the white moving average. We got the yellow crossing above the white, or the 8 crossing above the 55. Then after we crossed it, we had a back test on the 55, followed by a bullish bounce. That's why I say when we get a wolf cross with the 8 above the 55, it has upside implied. Now we have the 8 crossing below the 55, and we're gravitating back up to the 55, and we're getting rejected. Now, I'm just letting you know where I can dial this in the most, and it could be the most accurate, is not with crypto. I'm being very transparent and honest here, and I don't want to confuse you, but these sorts of methods are much cleaner when you're doing like a stock market chart. Remember, crypto has a ton of volatility, so we always take things and give it some wiggle room here in crypto world. So I'm not saying that we can't close above the 55 on a daily close sometime soon, but it's just this is kind of the play right here, is to expect a bullish bounce into this key moving average, and the odds are we still have a lower high, meaning we should not right now at this time, especially off of this bounce, be breaking our current highs. It would be very weird. And if we were to, it would be more of an even more devastating bull trap, but I'll get to that later. Needless to say, we talked about a couple of these signals or confirmations to look out for, regardless of this Bitcoin ETF thing. And we're watching it come to life step by step. So we're really ahead of the game here. And this is great to see how we had this sideways kind of momentum, getting a bunch of rejections around the macro 702 fib, and then peaking up right above that 47K level, rejection at 49K on the nose, followed by a 22% correction. And then now we have our wolf cross with downside implied. It just got going, and we are getting rejected off the 55. What that means in plain English is weakness after weakness after weakness after weakness. This is what a lot of people who don't know TA are going to be struggling with in this game. They're getting too fancy with too many indicators and too much emotional bias. We're not doing that here. We don't follow, all of this exoteric nonsense and fall for it. That's why we were able to get out and de-risk regardless of this ETF being promoted as the most bullish thing under the sun for Bitcoin. We know how this game goes here. Don't be a bull, don't be a bear, be a wolf, follow the moon. And now that we're seeing Bitcoin traded perfectly into the new moon to the high, and then got brought back down to the lows on the following full moon, it proves what's really running this market. But all of you here already are aware of that. Also, as mentioned a couple times, we have this upcoming Federal Reserve FOMC meeting this Wednesday on January 31st. This is also our monthly close, so I'll be reviewing the monthly close later when we get into the TA section, but for now, let's get into today's decode. I have a couple interesting things to share with you for this upcoming week. I think you're really going to enjoy this stuff. It's also sort of preparation into the beginning stages of what's going to lead into my Year of the Dragon decoded, which will be in a couple days. So this is going to lead into that. I think that's a really nice way for me to prepare this all for you today. So we have February 2nd, and this being an interesting date because in the Gregorian calendar, it would be wrote 2-2. So we have 22, the master number. Now, this February 2nd this year is unique because it's a leap year. So it not only makes this the 33rd day of the year, but it also makes it the day leaving 333 days in the year. That only effectively happens on leap years. So this is really special. This will be the first time this happens during my channel being created. So that's really cool. I want to see how this works out. I'm not the biggest believer in the Gregorian calendar as the main mover or main energy of what's going on in this reality, but I do think it's what rules over the masses, over the 99%. As for the lone wolves out there that have practiced discernment and common sense throughout their life, you would know that this calendar is completely make-believe. I call it a scam calendar for a reason, and that's why I take a lot of it with a grain of salt, but I do utilize it when needed. I consider it, but I don't give all of my energy to it. I really enjoy actually studying the Hebrew calendar and utilizing that more, especially when it comes to finances, because Zionism created the economy and the Federal Reserve System and central banking and these upcoming CBDCs and blockchain technology and all of things that come down to capitalism. So I rather follow the calendar that is based in the energy of the peoples who designed capitalism. Needless to say, I do like the Gregorian calendar for some use cases, but it's not the one and only, right? We're aware that there's many other calendars out there. I would just like to put weight on the Hebrew in regards to specifically finance. And we've been doing that here since the origin of this channel, and it's been very helpful for us being able to determine not only short-term moves, but really long time horizons. For instance, we were able to determine this bullish move for Bitcoin up to the 47 to 49K territory 8 months before it happened. All of that was referencing the Jubilee year, which was based off of awareness of the Shemitah year, which is based off of awareness of the Hebrew calendar, not the Gregorian. So now that we got that out of the way, building some, kind of foundation here for those that are especially new. I love when I'm seeing some of these differences on these leap years, and I'm going to be tracking some of those changes throughout my past work and seeing what effect it has. As a data analyst and data scientist, it's always fun to have the data and be playful with it and see how it affects year by year. So we have this February 2nd, the 2/2, 33rd day of the year, also happening to be the 333 days left in the year. What I'm doing is I'm comparing this date to February 24th, which is the 224 date in the 224 year. So you always remove the 0 in the rules of numerology. You have 224 connected to this date that we're identifying being special, considering this numerology down here, your master number and kind of like your ascended master number. Now, these dates are 22 days apart. So 22 days apart from the 2/2 date. And this is significant because this is the exact day of the February full moon. This number 22 that we're talking about is the master builder. It's also the master destroyer, right? And when thinking about this concept of destroying and rebuilding, we usually think of the 9/11 ritual that happened on the world stage. And it's fascinating how February 2nd is connected to 9/11. Let me show you this. By 222 days, naturally. To me, this reveals that from February 2nd, which is right around the corner, it's this upcoming Friday, through February 24th, the first date I was just talking about, that's going to be an incredibly volatile time. Those 3 weeks, essentially, or 22 days from the 2/2 date. Okay, take note of that. Now, I'm going to bring this all full circle for you. Look at how 9/11 lands on the day, leaving 111 days in the year. And when we go back 22 days before February 2nd, I want to show you what that date becomes. It becomes January 11th, the 111 date. We were just showing how September 11th leaves 111 days in the year. And here we have 22 days back from the 2/2 date is January 11th. Now, why that's super important, naturally, it's the 11th day of the year, obviously, but it's also an 11-date numerology, and it's also the day that Bitcoin has hit its microcycle top. So it's the day that Bitcoin has hit 49K, leading into Satoshi Nakamoto's mythological 49th birthday. What a shocker. This is another reason why I feel that these should be the lows for now, that should be the high for now until we get closer to Satoshi's birthday, which is in April, right around the next solar eclipse. But between now and then, I'm feeling really good about how there could be a deeper correction this next month. So just wanted to share that 22 days before the February 2nd date, the 2/2 date, was the exact day of our top. And then 22 days after the 2/2 date is 22 days apart, obviously, but then it lands on the full moon. And we've been decoding this full moon for a while now. So I just decoded the 22 connection to all of this and the master builder and master destroyer, and that could be kind of the effect here. The building of the tower and the destruction of it. So for me, this really dials in my thesis of a deeper correction for Bitcoin by mid-February. And since I brought up the idea, let's review a Wyckoff schematic that I created just for you guys for this episode that could be showing us the likely pattern Bitcoin's playing out right now in the micro, so in the short term. And then we're going to be getting into our technical analysis today. So as mentioned, I designed this for you all. Up here at the top is Bitcoin's actual price movement on the 12-hour, and it's starting at about, I want to say, October-ish time frame, so it's not a huge time horizon. It's more scaled down. But that's what's beautiful about the Wyckoff method is you could utilize it no matter what time horizon you're looking at. If you wanted to zoom out and look at 10-year intervals or cyclical interviews like in intervals like in crypto being a 4-year cycle, or if you wanted to look at it in like a stock market cycle, which is typically a 7 to 9 year cycle, or if you wanted to look at it on the 7-hour chart, super zoomed in on just a month of data, you can do that. That's why I love Wyckoff method. I actually teach this in my advanced trading course, how to use this Wyckoff method, not only the accumulation schematics, but the distribution schematics, as well as the redistribution and reaccumulation. I share high quality PDF files of all of the schematics. I believe it's about 12 or so, or no, 16. It's about 16 to 18 full schematics that are included in that course. And there's been plenty of traders out there that have invested in that course, printed out those schematics, and they said that once they did that, their win to loss ratio was dramatically different. They have increased the amount of trades they've won substantially, especially while staying consistent and not deviating from the plan of what these schematics are showing. So just wanted to give some information onto that. Again, Richard Wyckoff died pretty much 100 years ago, and we're still here using this today with incredible accuracy. That's why I really love Wyckoff method. I call it the market compass. It's like knowing where you're at instantly when you open up any chart. So I do believe that we have this Wyckoff distribution schematic playing out as we speak on Bitcoin. I'll take this step by step. Let me just get a quick sip of water and then we will thoroughly review this chart. All right. So we have this initial run up after we broke the original resistance. Let me show you on a larger scale. And it was right here. We got these two kind of double top-esque rejections that came in on April and July, followed by two bottoms before breaking out. So we're effectively starting this horizontal analysis, or this Wyckoff distribution cycle, after this breakout. Because after you break out, you start to get overexhausted, you start to top out, and then that's when you want to flip from looking at accumulation schematics to distribution schematics. Okay. And of course, we're considering the time frame here. When we're talking about looking at everything in this picture, this huge picture, it's a lot different than looking at it in an even bigger picture, which would be looking cycle to cycle. We're looking at it very small, just this little section, and it's based off of what's been going on for Bitcoin since it bottomed out back at the effective selling climax of our overall macro cycle. So we're looking at a cycle within a cycle. That's why we delineate micro versus macro. That's how to stay on top of this. So over here, we have the first phase marked out in phase A, being the buying climax, when buying pressure is effectively exhausted. And you can tell because after we have our initial correction, we have something called an automatic rally or an automatic reaction where we spring back up, and then we start to notice that we have effectively exhausted buying pressure when we're getting rejected at similar highs to the buying climax. This can be elusive when you're looking at shorter time frames, so just bear with me here. I'm going to only really focus on what I think is the most important things to mention, which is you have right here a couple rejections, you have right here a couple of back tests. This is where you can start forming what your supports and resistances are, and then when you get off of this double bottom and you get rejected again at the same levels, this is really showing you that these supply tests, or these STs, are proving the exhaustion of buyers. There's really not many people willing to buy at these levels. Now, with what I'm explaining, I want you to delete from your mind anything about Bitcoin, the ETF stuff going on, volume, all of that. Just delete it all from your mind and look at this for what it is. No emotion. You could take the same thing I'm teaching you right now and apply it to any chart, not just Bitcoin. You could do this with XRP. You could do this with ETH. You could do this with anything. All right. So now that we've had this back test again into a support that we were previously holding, we have one more move up, which is again elusive because it seems like, oh, we're going to break out now. And we don't. We get rejected again. And you see this tail to the downside was very dramatic. It brought you all the way back to backtesting the original lower support. That's a sign of weakness, even though we did make a higher high. So we're seemingly in an uptrend, but not really too much proof that we're ready to go, especially after you get this sort of liquidation event. Okay, so this perfectly matches this supply test here in phase B, moving into phase C. Then you have some chop, but still holding the uptrend. You see here, holding the uptrend. And then you have this move called UTAD, or up thrust after distribution. This is the effective time frame of the Bitcoin ETF approvals happening. Oh, now they have some news to give you. They have something exoteric to suck you in, you know? And then that's where all the whales have sell walls. They were prepared for this. Of course they are, because they're the ones who engineered the news. It's all a game, right? You're in the gambling casino. Knowing these schematics will get you ahead of it all so that you're not getting fleeced. So this upthrust after distribution played out perfectly, because look at how it was a slightly higher high above the initial rejection levels, or the initial resistances. You would have an imaginary line here, and you would have your imaginary line coming in after your upper high or higher high supply test. I don't want to get super complicated here, but you can tell that this is effectively a bull trap. You couldn't break out too much higher, lots of rejections, and then this big red candle right here is proof, because you were brought right back down into the initial horizontal range that you were trading in after the event has occurred, right? So you had all of this anticipation, buildup, news, event, sell-off. Then you came back down to the same horizontal level of your support. Now you broke below it. Shocker. Once you saw this moment come in where we had a candle close below the initial lows right around here, that is where we would have an SOW. I don't talk about this too often, but it's called a sign of weakness. So if I had to tell you where I think we are today, we're here. Our sign of weakness is complete. We're now headed for an LPSY, or I would just call this a lower high if you want to keep things super simple. But now I want you to take note of the current support levels and daily closure low at 39K, which is right here. You would want to keep that in mind, because if we get rejected on a lower high or anything below these UTAD levels, and then we start to close lower than this SOW, we're done. This thing is going to break down all the way to probably 33, maybe 32.5, somewhere in that lower area. And we'll recap that in a moment, kind of our downside targets. But I'm showing you what I think Bitcoin is exactly doing right now. And look at where it's buying back to in this area. And then I want you to look at this schematic specifically and look at how you have your SOW. Your LPSY brings you into some of the lows that you were getting bounces along this horizontal range. Now, let's look at where Bitcoin is on the 12-hour. We're going to hold it just like we were with this comparative chart, and look at what we're dealing with. So we have this imaginary line going across the screen, and Bitcoin, again, lower high, even lower high than this moment right here on January 16th. I take this move right now with a grain of salt, because a lot of this bullishness was just happening off of the weekend. So I think that this is an almost perfect comparison of utilizing a Wyckoff distribution schematic in a smaller time frame according to what is happening in the bigger picture. I hope this has been helpful. This is sort of like a TA lesson that you're getting right now today. So definitely take notes, rewatch this if needed. And as I said, for those that really want to dial in the Wyckoff method for themselves so that they could be a more effective trader, that's going to be covered in my advanced trading course. All right, so this is the perfect time to pivot over into the live charts and review what's going on over the past week. I want to show what happened with the Bitcoin CME chart over the past week since we last connected. And we have this downside gap effectively filled. So remember, I was talking in my last red pill that I feel it's likely we fill this gap first And then we have what would be a bull trap. So we're done here. I don't think we have any gaps as of now. Actually, no, that might be down there. Let me see. No, we got, nope. Okay, so now we have one down here. If you want to find gaps, you could just go on the 55-minute chart or the 1 hour chart, and it's pretty simple to find them that way. They're almost impossible to find if you looked at a daily. But you know, if you get a daily gap, that it's almost certain to get filled in these shorter time frames. Okay, so I mean, it's the same shit. How did that even form? That's really awkward, because it happened midweek. What was the market closed for a couple minutes? All right, I'm not going to put too much emphasis on this, even though, again, I'm generally looking for more downside. I don't care at this point the specifics. It's just down is my vibe. So we filled that bigger gap that was obvious. Now we have to deal with this current buyback, big green candle we had on the weekly close, still lower highs. And then I shared this theory of bouncing as high as like the 44K level. We'll get into that when I look at the Bitcoin analysis, because right now we're looking at the CME chart, but this is good enough, kind of to be expected to fill these gaps before bounces along the way, deeper corrections to follow. Getting over to the Bitcoin index chart. We talked about earlier this rejection at the 55 simple moving average, which we effectively got today. Now, one of the things you're going to see on this chart, which is probably hard for you to see, let me see right here. Okay, yeah, this was the chart that I shared with you all over on Discord. It's just showing that we could have a move into this 0.5 fib, and that would be your dead cat bounce scenario. Or we can have a more extreme buyback, which actually is in alignment with this trend line here that's been in play for a long time. Let me show you how long it's been in play. And then we'll just take this step by step. So you have the beginning of 2023, a year ago. 1 second. All right. So you have this buyback essence all year of relief rally, if you will, or what I'm calling a macro automatic rally. And I feel that we've topped out effectively in our automatic rally, and we're ready for a little bit of a correction. Now, if I was to really take this step by step, where we're at right now is just another SOS followed by an LPS or a backup. Don't want to get too complicated here, but I just wanted to put emphasis on this trend line, how we had bounce, another bounce, another bounce, then we broke below it, then we got above it, gravitated back to it, we traded above it near the finality of the automatic rally, and then since we've broken below it again. So it would be really a problem is if we were to bounce all the way up to it and get rejected, and then now we just plant this lower high and then roll over. That would show some weakness. Now, what's crazy is if I zoom out and I see where this is taking us till like the end of the year, or how about this? I'll show you where we would be breaking all-time highs according to this trend line. It's July. Now, I've told you, I'm not anticipating a new all-time high for Bitcoin earlier than September, but even if we just kept snaking around this trend line, that would show all-time high by July. It's not what I'm saying. I think we'll be out of our low energy, like out of this mid-range. I want to say by August into September. That would make a ton of sense to me. And September is a generally really good time for Bitcoin, especially when we're not in a Shemitah year. So keep that in mind. I do think by September it would start making sense to be approaching prior all-time highs. And by the end of the year, for sure. By the end of the year, it should have already been taken care of. So we have this idea. This would be the more extreme bull trap, I think, if we were to get bought all the way back up into the golden pocket. But that's not weird because Bitcoin has done that all the other times too. I showed you these iterations, and just look at the analysis I shared in the update post a couple days ago. So now I want to, we got our wolf cross. And one thing to point out is that I have a bearish fib pulled from this swing low down here up to this swing high. And it's showing me right there, the 1618 at the bottom, sitting right around 33,200. And that's perfect because that's right around our macro 0.5 fib. That would be a really solid level to come back into. And if you pay attention to this trend line I have drawn out, it's just showing that we could have another retest of another level that was holding. This is a little bit more experimental, but bear with me. It seems to be aligning perfectly with this area right here. So this corrective move, we have technicals showing us. The 1618 is typically where we head down to if we were to continue a correction. And I'm using this fib tool in a little more unique of a way. Typically people pull it from swing high to swing low. I'm doing it in reverse. I've been doing it that way for a couple of years now, and it's given me some of the most amazing buying levels in regards to accuracy. So I love using it like that on a logarithmic chart, log scale. Buyback to there would make a ton of sense. We also have these two top rejection levels that we haven't really backtested since. So getting a wick down to that 31 area would not be weird. And like I've told you, getting bought back within the same week is likely. It would be weird at this time to fill that lower CME gap below 20K. The one that we talked about in the last red pill. I'm not entertaining that right now because I think if this was really that devastating, we would have seen a lot more sell pressure in the past week or so than just a 20% correction from top. We would have seen a lot more sell pressure coming in now. Of course, there's arguments here of, well, the stock market's at all-time highs. Yeah, well, Bitcoin isn't, right? So we're not correlated in that way. And Bitcoin has way more degens and people, like unsophisticated money involved. So if that was the case, then, I mean, there you go. It's not proving itself clearly. And I'm not a believer that Bitcoin is actually following the stock market. The way I look at the market is Bitcoin is following its own astrology. It's following a solar cycle or a lunar cycle. It's following eclipses. The stock market really isn't. It's in a different energy, because it's an index of all these different all these different stocks, excuse me. So we're talking about the Dow or the S&P or the NASDAQ. We're not isolating it down to one thing like we are with Bitcoin. It's a lot easier actually to determine Bitcoin way more in advance. With the stock market, we could kind of just play the Shemitah. So yeah, I don't know. I don't want to tangent too much right now. Let's get back to this analysis. But I think you guys know what I mean by this. We have to let this CME open, the stock market open tomorrow, and this FOMC to really have a good feel on how this next week, 2 weeks are going to go. But it seems that we've bought back very bullish over the past 3 days or so, and it's getting a little exhausted. So I would not be surprised if Bitcoin by the new moon could make it up higher, of course, maybe around to 44, 45 by the February new moon. But after that, I think that would be sensible to see that deeper correction. And we got about a 20% correction off of 12 days. If we were to take from the new moon, which is around the 8th, I believe, the 9th. And we don't have to top out perfectly on that date, but I'm just giving you an idea. So if we were to copy those moves, basically the same move we did from here to here, after the buyback, have the same correction off of around this level, this technical level of 44K, it would be bringing us to 35. That still, it does make a lot of sense that we can make the move that quickly. We could go even faster because you guys know Bitcoin. We've had some really nasty corrections in a short amount of time. We saw it happen back here. The speed of which you can do a 20% correction is very fast in crypto world. All right, my voice is dead today. Apologies, guys. I'm trying so hard to get through this, but it's starting to annoy me. I'm starting to get a little frustrated, which is rare. I don't know what the hell's going on. I need to take like a week off. But I did a 2.5 hour live stream yesterday, so how could you blame me? All right, I'm just looking through some of this, and let's pivot over into just traditional analysis on Bitcoin. Look at the monthly, bi-monthly. All right. So this type of candle structure is horrifying. This is not a good sign. Whenever you're getting these styles of doji candles, it's very toppy looking. We saw one here at the buying climax of April 2021. That's kind of the essence we're getting right now, especially if it closes red. So we're going to close under 42K on this monthly close, then yeah. Even if it closed green though, that's still precarious. So I would keep that in mind. Now on these ARs, we don't typically close ARs on these dojis. We had over here this move. I wouldn't call that a doji. So we had this moment over here, and then we had this moment over here. Nice big green candle of 26%, and then we had this moment over here, 26%. Well, that's not the case right now. So it's seemingly an even more bearish signal, this type of top. So just keep that in mind. If we close this month red, especially as a doji, it's looking very reversal-esque. And even if we were to close a slight green, still a doji, reversal-esque. Not the best. But in the big picture, gorgeous. No complaints in the big picture. I'm just talking about the short term for now. So we have the 55 sloping up to around 28K. We have this 8 simple moving average sloping up to around 33.6. Again, that would make a lot of sense on a deeper pullback to come back down to the 8 simple moving average around 32, 33K. Just keep that in mind. Well, there we have it. All EMAs are in bullish posture on the monthly chart, man. We have the 8, 13, 21, 34, 55 in order, splaying out as well, fanning out a little bit. That's very nice to see. Bullish as fuck. All right, bi-weekly closure is also coming up today. We're back testing the 8 already. This type of bi-weekly candle is a top candle to me. That's a reversal candle. Big wick to the upside, showing buying pressure is exhausted, and the selling pressure came in the same time frame. Again, a sign of weakness. And also this week had a ton of volume, so it's not random. It was real trading going on. Not the institutional trading they told you would happen. They were like, remember that mess? A week before the ETF, they were like, $2 quadrillion is going to come into Bitcoin in a week. Shut up. It's nonsense. How do people fall for that? All right, so very toppy looking. Closing below the 8 would definitely be a sign of weakness, but I don't think we're going to get absorbed that much in a single trading day. It'd be very unlikely unless there was some event that happened on the world stage to trigger that in the next 5 or 6 hours. But still, I think we have a little bit more time. We could get bought back up a little bit more, as I said, in the following weeks, the next week or so, up to that like 43, 40K, 44K area. I'm still considering that. We already hit 43 today, so it's not much extra. And then a rollover. And then this 21 EMA on the bi-weekly is pretty crucial. But the fact that we're getting these all in bullish posture, fanning out very nicely. We had the Wolf Cross come in November on the bi-weekly chart with upside implied. It's looking beautiful. I suspect higher lows are still in play, and at best, worst case scenario, which is a best case scenario for the Wolf Pack, would be a correction down into these mid 20K area. But I still think that if that was the case, it would be getting bought back very quick. So here we are, we're on the weekly chart, and we have the sign of weakness being a closure below the 8 simple moving average, and the fact that we're still struggling to get back above that 8 simple moving average means it's confirmed. So if we were to close today, especially a red candle, which would be like trading below 41.4, which right now we're trading at 41.9, that's a little move, guys. We would only need to get less than 2% sell-off for Bitcoin onto this weekly closure, which is coming up right around the time the stock market is reopening, or not the stock market, but the Dow Jones. So keep that in mind. Now, it's very typical to backtest the 21 weekly EMA, but based on where we're at now, getting overextended in this buyback, I do think that the 34 is more than likely to get tested. And if we really wanted to get sucked down, keep an eye on that 55 simple. These are very key moving averages at this time. You could see at the end of this last automatic rally phase, we came back to the 55 simple and traded on top of it for 42 days, for like going on 7 weeks before a bounce, a lower high, and this black swan event. Let's look at this. So we got the 34 pierce through at the end of that move. And then where were we at over here? Oh, we only got, wow, very strong chart back here, but it was also super low volatility. Anyways, I'd be keeping my eye on that 55. It doesn't mean we have to go as deep as that level, but every week we're going to be sloping up higher. So tonight we could actually see this close and get close to 31. And then we can see the following week, and by the end of February, we can see this 55 simple sloping up to around 32K. That's perfectly in alignment with these 2 rejection tops that I told you to consider. So I'm building my reaccumulation area all around 31 through 33 for Bitcoin. And I don't want to get greedy right now. Like, I think it's low likelihood that we're going to be trading below 30K. I'm not saying it's impossible, because of course it's very possible, but I don't think it's going to last long. So putting all my energy into an investment thesis that is the lesser probability is where greed can be taking over you when it comes to setting up your buy limit orders. So I'd keep an eye on that. Anyways, this is still looking bullish as hell. So let's go to the 5-day. Okay, the 5-day is showing a clear sign, which is this perfect line of the 55. And I just needed to take a second to realize how many supports we got back here on this test before we broke out to what I'm calling the finality of the AR. Seriously insane how well it was holding the 5-day 55. Wow. And then look, remember what I was teaching you guys earlier about how when we get the wolf cross, we tend to back test the 55. Well, that's perfectly in play too. Returned, and then we had another impulse. So look at where the 55 5-day is today. It's at 32.3. That is exactly at the 0.5 fib. I mean, how coordinated is that? The 55 SMA on the 5-day chart is at the 0.5 fib. How many fives? That's fucking hilarious. And it's at 32K, which 3 plus 2 equals 5. You can't make this shit up. That's crazy, man. How many numbers are sequenced there? So yeah, 5-day chart looking pretty, great. Weakness is showing up as to be expected. Any closures below the 21 EMA, I think we're going to send it lower, but you already know that based on the horizontal levels. And then a buyback on the 55, or a retest plus buyback on the 55 as a support would be to be expected, let's just say. Oh, we also have the 3-day closure on the same day as our monthly close. Okay, so the monthly close is pretty big, because the monthly close is also going to be a 5-day and a 3-day closure. So keep that in mind. We're showing weakness because look, we closed below the 21 on the 3-day. We got supported by the 34. Again, just look at the moving averages in sequence. The way I teach these EMAs and how to utilize them, it's going to get you 10x more advanced than 99% of people who do TA. You don't even need to use all the other stuff. You know, Bollinger Bands are fine, using RSI and MACD. These are like icing on the cake. But when you nail Wyckoff method and combine it with the esoterica, and then also have these EMAs and know how to use them and know how to use their crosses on multiple time frames, yeah, you're going to kill it. Again, I teach all of this in the courses. So this is looking, again, like a sign of weakness. This Twin Towers candle right here closed below the 9, then eventual close below the 21. We're holding on the 34, but when we have this 8, 13, sloping to the downside with this 21 flatlining, it's showing me this is ready to have a deeper correction. Look right here. It's the same effect. Look right here. It's the same effect. See, this is what's important. You just got to look at the data in the past, and you're going to see how these moving averages and the price action are all like in harmony together. So yeah, I don't know if we're going to get a downside wolf cross on the 3-day anymore, but shit, anything's possible in the matrix. But I do think we're going to play out like these last 3 iterations where you see back test on the 55, back test on the 55, back test on the 55, but we had a wolf cross, so that's different. But here, our 55 is coming up into this 35. We could effectively swoop below it for like this much time. 50 days, 50 or 60 days, and that's in perfect alignment with what I'm thinking about the months of May and June. Remember, I told everyone, I think we're topped for now. I think we are probably going to stay lower highs and have a deeper correction sometime in February, March. Around the Bitcoin halving, I think we'll be in the middle of whatever that range is between our highs and our upcoming lows. We'll trade sideways in that range through June, and by July, we will start to bounce and recover out of it. Maybe by July, August, we can start breaking these highs that we've planted in this month of January around the ETF approvals. And then September, October, that's when I see us retesting all-time highs. So I just gave you the play-by-play right there. Take notes. Okay, the daily, we already have all of our awareness of weakness. We had the wolf cross with downside implied, 8 below the 55. We have the 34 at the top. That's a bad sign. So all of our EMAs just flipped from bullish posture to bearish posture. Once we close below this 8 again, I think we're going to have this start to again make lower highs, and then that would just solidify our deeper corrective target. But if I wanted to simplify all of this, just any new daily closure lows, anything below 39K on a close, I think we're going to swoop down to this 34, 33 level soon after. Quick recap of the stock market. I'm not going to take too much time on this, but we have all-time highs. Again, look at the Dow. This is unbelievable. So the Dow is all-time highs. We have now effectively started to break higher than the 1618. Mamma mia. Mamma mia. This is unbelievable. So yeah, I mean, killing it. Dow is killing it. Post-Jubilee year. Gotta love it. Welcome to another day in the Matrix. So we have the S&P. I have effectively the same fib pull from this swing high down to the swing low, and we have the 1618 up here. I've talked about how I do anticipate that to be hit before April. We should just do the same thing with the Dow too, or sorry, the NASDAQ. Oh my goodness, dude. What the fuck is going on? Oh my God. I can't believe we're looking at this chart right now, dude. I've been doing TA for so long, and like when you're looking at this stock market doing what it's doing in this economy, it's make believe. This is make believe. We are in La La Land. This is all fake. But if you were playing the game, good for you. We're here playing the game. But I mean, there's way more to get out of like even Bitcoin than there is out of this mess. I mean, look, just from this pivot up to here, 24%. But still, I'm just, again, it's silly that the market's even doing this. But if you were to think of where this market has been, if you bought the absolute bottom in December of 2022, compared to just Bitcoin, 153%. So if you bought around the time of the October solar eclipse, you'd be doing just as good as if you bought the bottom of the NASDAQ. So it's still better to be in crypto for sure. Even if you wanted to be in just Bitcoin, it's still 100 times more lucrative. But as a technical analyst looking at these charts and seeing a breakout into all-time highs at this time, it's absolutely silly. Yeah, I'm not going to spend too much time on this, but because we're in price discovery, right? There's not too much to say. The only thing that we could really do now that we've breached these 1618s, is we can try to do some more fancy analysis. I could take this off and I could see where our 4236 is. Oh my God. We're going to hit 22. We could do it. I think we could do it. This year, into the year of the snake, we could see 22.6 NASDAQ. If they really want to make this shit go crazy. I'm not going to put too much out there right now on my feelings of where the stock market's going, because I've already been very, very, very transparent. I don't want to overspeak right now because I know we're getting a little excited, but I've already said this. I believe that in March, late March or early April, no later than the mid-April timeframe, we should have topped out for the moment, and we could very well be much higher than we are now, obviously, because there's a lot of time between now and then. Then we should have a pullback into the months of May, June, and then have a bounce recovery into September. It's in alignment also with what I've just shared about Bitcoin. Okay, that's the year of the dragon kind of vibe. I'll be getting into that more during the year of the dragon decode. But this is what the stock market does almost every year of the dragon. As we go from year of the rabbit to pivoting into the year of the dragon, we tend to have this bullish momentum into the very beginning of the election year. And then we have a correction in April, May, little lull in June, July, and then a buyback. And then we have the fall time leading into the elections. You have that September, October, November timeframe where all the talk of the town is the elections. And that's kind of that moment of glory, of distraction. So whatever this whole market does upcoming in regards to pullback is just a buying opportunity. We're still in an accumulation phase, and to take it very seriously now before the Bitcoin halving for those that are interested in crypto. Yeah, so those are my thoughts right now. Can't really say too much until we get a wolf cross on any of these daily charts for the NASDAQ, S&P, and Dow. We're going to continue to just rise as long as this market wants to get liquidity pumped into it by the Fed. Now, last thing I'll say, we have a FOMC meeting in a couple days. Anticipate volatility tomorrow, Wednesday, and Thursday. That's really going to be the effect. And a lot of the time, this FOMC move, the maneuver, it's a week after effect. So it could be crazy for the next 7 days or so after the actual FOMC. And then it'll go back to normal. Just anticipate that, big volatile week ahead. All right, let's go over to Ethereum. Okay, so this is very important that we are here now. I have something important to say, and it's just because I got a lot of hate on my Bearable Bull podcast, and I got a lot of hate even in Red Pill podcasts, unfortunately, about an idea that I said. And I simply said, I do not see an alt season happening right now. I do not see a rotation. I've said this months before Bitcoin even had the move up that it did. I did not see a rotation. Now, if you look off the buyback that we've gotten for Bitcoin lately, which has effectively been about 10%, look at the buyback we've gotten on ETH, essentially half that, okay? We're not getting a rotation right now. I don't know how to spell it out for people. I think I don't want to sound like territorial or like I'm challenging or I'm being like pulling out my Mars card, but I have a feeling that there's other TA analysts out there that were selling you all on this idea of an alt season or some sort of dramatic altcoin liquidity injection after the rollover of Bitcoin. I don't know who that is, but I'm going to assume that's the only way this could have brought that hate towards me. Because we have so many sophisticated people around these parts here in the wolf pack, and when I'm having my own people tell me I'm wrong and tell me that I don't know what I'm talking about and tell me that, this would happen and that's going to be different because that sort of energy tells me that they are getting sold on a story from someone else. And that's fine. If you have your own TA, there's nothing wrong with you defending it, but the kind of energy that came in around my thoughts being shared on there being no alt season right now until after the year is over, pretty much Bitcoin needs to go into price discovery in order for that to happen. It brought a lot of that sort of energy towards me, and I'm not offended. Like, I've been doing this for so long now that I'm a grown man about it. I anticipate a lot of people to not see where I'm coming from. But just look at how Bitcoin's behaved in the past and do it for yourself. Don't just listen to me. Don't just listen to anyone blindly. Like, do it for yourself. All right? Well, anyways, here we are. We've had ETH pull back with Bitcoin, everything else as well, Solana, all of it. There's been no rotation. We are now at the time frame where it's effectively been on 14 days. And if you look at how alt seasons go, it's the 2 weeks to 3 weeks after we have Bitcoin roll over is when we're seeing shit get nuts in altcoins. And that's not the case right now. They're actually all buying back with less volatility than Bitcoin. They're performing worse. I don't know who sold people on this idea. We're not there yet, man. And that's good news, by the way. We're not there yet, meaning we have more time. I'm going to shift super positive for everyone. We have more time to accumulate. You have more time to get incredibly discounted altcoins. You should be happy about this. All right? You have more time to accumulate before it really gets crazy. Okay? So I've been super transparent about all my moves along the way. I de-risked my ETH, I de-risked my Bitcoin, I de-risked my XRP back in July. I wanted to prep myself for a big move to the downside for altcoins, followed by this rejection on Bitcoin. And so far, a lot of altcoins have actually had a 30 to 40% correction from these recent, all of them synchronizing their top outs. Now that's just 40%. I think we could go more. I see at least 60 to 70%. When I shared this thought on Solana having a 70% correction from the local top, I was getting crucified. People thought I was out of my mind. And I'm like, you guys gotta see it for what it is. This stuff can't just go up forever. And when it does eventually top out, it has a super arduous and elusive pullback that bores you and scares you, and it forces you to panic sell because you're emotional about the whole thing. So this is the Red Pill podcast. The Red Pill needs to be handed out. It's something that needs to be said. Now that we're tracking a couple weeks of this sell-off since the ETF approvals, you can see where I'm coming from. I wasn't trying to sensationalize. And I think this idea of telling people or selling people on an alt season was a dangerous form of sensationalizing make-believe analysis. No offense, but it's just the truth. So where we're at right now with this is seemingly developing a head and shoulders pattern. All right, we have whatever you want to call this. You could call this directly the left shoulder or a larger left shoulder. I don't really care. Clear head, and we're developing the right shoulder. And I do think that this is just the start of the breakdown of ETH, which will effectively change all the altcoins' essence, if you will. The 0.5 is in my eyes, but I think that the 382 is going to be the next move. And if we were to look at the total correction off of this local top, it'd be about 40%. That's to be expected for ETH. If ETH is going to pull back 40%, get ready to see what that does to all the other altcoins. The only exception, like I said in my last YouTube video, would be XRP. XRP specifically because it has the grand trial coming up in April. It has some updates coming up in March regarding this case, and it's just supremely suppressed. But stuff like Solana that's been incredibly bullish, or things like another good example would be Avalanche, there's still more to go to the downside. All right. So ETH, let me look at the monthly close and see where we're at with that. Turn off all this noise for everyone. Okay, there we go. We have a clear top out candle. So anything we close below this 2270 region, which today we are, that's going to show a sign of reversal. And I would look to, that's perfect. Okay, you see how the monthly candle has been, or the monthly ETH chart has been supported by this 55 simple for the most part. That 55 simple sits at 1580. I just told you about the 1600 level. So that would be great. We can still see this deeper correction and hold the supports and higher lows. So we have low, higher low, higher low, and still the next incoming higher low. That's fantastic. If that was to happen, to retest that 55 would be one of the best buying opportunities possible for ETH. Excuse me. So let's just quickly scan through. We have the bi-weekly. Yeah, Twin Towers candle on the bi-weekly. We're not looking so good, but we do have a bunch of support coming in around 1900. So the first leg down at 1900, I do think will catch, but then whatever Bitcoin does can sink it lower, obviously. And then we have the bi-weekly closures on our higher lows sitting around 1580, which is right in alignment with the 55 simple that I just showed you on the monthly chart. Let's look at the weekly. The weekly's just starting to show weakness. If we close today where we're at, we're going to be closing below the 8 simple moving average. That's a sign of weakness for sure on the weekly. And then coming back to the 21 is normal, but on altcoins, it's usually the 34. And then the fact that this 55 sitting around 1800 is yeah, it's telling me all the signs that I need that once we start closing below the 8 and the 13, I do think we're going to swoop down a little bit more, rebalance this RSI because we started to get some bearish divergences forming. And one more test below the 50 RSI would be expected for me at this stage of the run. Let's get over to XRP. Okay, so XRP on the weekly chart is holding this 55 simple, which is really solid to see, even though we've dipped below to 49 cents a couple times. I've told everyone that I do think the months of March and April are going to be extremely elusive for XRP. So for me, anything that's going to be corrective at this time, I will be buying. I just want to see how the next couple weeks go into February full moon. That'll probably be my final accumulations on XRP. If we're going to get that 48, 47, 46 cent range, great. To me, it's a gift. So I'm just going to wait this one out. I want to see how this whole move is going to go. But the difference between 57 or 47 and 52, excuse me, is not really that different in the grand scheme of things. So I'll continue to build my XRP position. I just need to be focused on leveling out my portfolio personally because I have a lot of XRP now. In the big picture, I want to stay balanced still. I'm not an XRP maxi. I'm not a Bitcoin maxi. I'm looking at everything holistically. So, one second. All right. We're looking pretty good, actually, holding these higher lows. I'm going to skip straight to the daily chart on XRP. We got this wolf cross coming back in, a bunch of rejections off the 55, this buyback rejection off the 55, and then lower closure, big sign of weakness. And now we're back into a horizontal trading range that we've effectively been in for a long time now. 600 days. So you see all these top rejections, we're right back there trading into that level. And it's a very clean horizontal level now. We have multiple higher lows and we have all of our higher highs. Here we're breaking through what was a symmetrical triangle, so it seems to be patterning out in a way that's just draining the XRP investor, making them panic sell, making them move on to other things. And that level of boredom is kind of what was going on back here in this moment before this thing just skyrocketed in a straight line. So I'm not saying this to give people hopium, but it's effectively the same sort of vibe. Just a really long-term, arduous 700-day trading range with snaking around the average price in the middle. Then it just went exploded up. And it's funny because the time frame that it did this was in March all the way until about May. So it's around that time of the grand trial. All right. Yeah, not a whole lot of updates on this because of the last analysis that I shared was, I believe, on the money regarding the dates and to anticipate, etc. And we need to just see how this goes with the opening of this week. If we were to start closing below this 42 level, that would be very, very problematic. I think I told you that in my last red pill as well. So we still have a lot of room to go in order to make that happen. That would have to be like a 20% loss from here and start closing dailies. That would show me a big sign of structural weakness. But trading anything around that level from 42 cents to where we're at now, it's still in alignment with a majority of the horizontal trading range. So it's nothing out of the ordinary. Just weak, essentially. It's just very weak. Let me go to near protocol. All right, got a little bit of a buyback. Let's see where this is with the fibs. All right, cool. Pull this one up. I'm not sure what's going on. I don't know the last time I covered this, maybe like 3 months ago. All right, so we have this whole chart in front of us. We have effectively this automatic rally phase, which has come to its finality. And I could tell you that in a couple ways. But for one, once you get over the 382, we start looking for the AR to peak. And we've had our peak perfectly into the 0.5 fib. That's about the minimum you'd want to see on a automatic rally for a crypto. For a stock, it's typically the 382. But for a crypto, you'd see about the 0.5 fib. And in extreme examples, you'd see all the way up to the 786. Again, that's a little more extreme, but it happens. It's kind of like what just happened with Solana. Solana just straight line broke out to that level, got rejected, and now it's sort of just kind of in its process of breaking down slowly. Getting back to Near Protocol, broke above the 382, rejected at the 0.5, and now when I zoom in, you're going to see we got a wolf cross. So we got this, I'm going to remove this. 8 crossed below the 55. We got bought back to the 55 like I teach you. And then this is kind of just the sign of where this will continue rolling over. And I feel it would be best to maybe place the fib for right here for now to get your initial downside target. And because it's in alignment with the 236, the macro 236 or around $2, that's very normal. After an AR coming down to the 236. Now, if this really wants to get slayed, we could be returning back to a double bottom right around these levels here at about $1. That's too dramatic, I think. That would be about a 75% pullback right now. I'm not entirely sure I can entertain that. It's a little dramatic. But entertaining a 60% pullback is exactly what I teach. That kind of stuff after an AR, it's normal. Now, let's go back here in the past and show you what an SOS to backup phase could look like and how dramatic a backup phase can get. So you have your SOS, you went up 1,000%, and then look at this correction. You did have about an 80% correction before topping out. This is a very elusive moment. We could be going through that right now. So the fact that we have 80% corrective target is not out of the ordinary. We can do it, and then it could follow with a even bigger pump. You see? So that's what's crazy about these. I know people use Elliott wave theory as well, but like on this first wave, you got about a 10x, then you lost 70 to 80% of your value, then you did another 10x. I mean, fuck, right? Like you could really play these altcoins if you get more sophisticated with the TA. So I just wanted to show you that the fact that I have this initial downside fib pull from this pivot to the current high of our AR, and then the 1618 situated all the way down here. Actually, let me adjust that. That would be more effective, but we're in the micro, so it's okay to use this too. Doesn't really matter. 1 second. I mean, it does matter if you're specifically trying to catch the perfect bottom, but the reason I say it does not matter is because the swing in between here and there can all be done within a couple days. So it's very like this. You see it's 46 days, but you have this chop. That's a DCA opportunity. You don't just buy it all in one day. Anyways, I hope this is all making sense with this 1618 bear pull, as I like to call it. And I have these levels marked out. I suppose I had a reason for that, and 154 would be gorgeous. And we've seen it happen before after this distributional top followed by a backup phase, which led to your buying climax. Smaller distributional top into a bigger distributional top. Oh, and by the way, I mean, if it got down to like the 150 area, I don't have a ton of data to work with on this chart, and it doesn't really make me want to invest in it. But I mean, you know, like you're looking at a back test of about a 10x on the all-time highs. So if you were to just get back to all-time highs, it'd be a 10x. Now we're looking at solo on the other hand. So this is not anything like the chart we just looked at. This is like a roller coaster that has crashed and fallen off the rails, and it's just kind of cascading now into the desert, chopping deeper and deeper into the sand. This is really not bueno. Looking at a 98% correction from launch, pretty much no progress along the way, just chop, rejection, broke support, chop, back, lower low, lower high. I mean, yikes. Still below the 236, no automatic rally essence at all. Okay, if I had to imagine that this had chart data from the past, I would call this the buying climax, and I would call this the selling climax, this the automatic rally, and everything below here is your spring. But the problem is this spring effect is taking too long, so I can't even feel confident saying that. But what I have to be honest and say is that this is still in price discovery to the downside. So yeah, like this is not a good investment at all. Like I know people right now are going to be like, well, what about the technology, the partnerships, the white paper, the dev team, the this, that, and the third? I don't give a shit. Look at the chart. There has been zero progress on this thing, whilst Bitcoin is trading up at the golden pocket. The most this coin has gone up from its lower lows is 60%. You'd be better off investing in a tech stock, right? So don't get lost in all this partnership and all. That stuff's cute. It's entertaining along the way in the cycle, but it could really get people to be overly exposed to shit coins. And this type of chart is without a doubt, right? So yeah, be careful with this stuff. Now with any bullish momentum, this can obviously do crazy things, but I would call the 99% correction with perpetual lower lows and lower highs also crazy. So you don't put a lot of money into stuff that's like this. It's called venture capital for a reason. Yeah, I don't think I'll be covering this again for a while. I know when I say these sorts of things, it offends people, but like if you guys ever want me to cover a chart that looks like this, it's pretty much a waste of time. You know, like it really just is. There is nothing to say on something that has this golf club like shape, this hockey stick chart. We need data from the past. We need some sort of cycle to work with. This is not impressive at all, and it is a very risky place to put capital. You know, if you're doing very well in life and you have fuck you money, then sure, you could put whatever in this. And if you are fine with it going to zero, great. But if you're somebody who's trying to actually have a sophisticated portfolio and you're trying to take yourself to the next level in life where you're focusing on compounding wins and not just gambling at the casino, this is stuff you should be allergic to. Just speaking the truth. So yeah, this is, yeah. Going to quant. So now we have some data. I think the quant chart does go back further. It's just impossible for me to find on TradingView. But we have a couple things to mention with quant. For one, we already had our AR come in very early last 2 years ago, actually. And we've been making lower highs since. So this is showing a sign that this was in fact the AR, and now it's getting ready for its next LPS kind of breakout vibe to what could be an SOS. So we're trying to figure out when this thing is going to have its breakout days. And I would say that to anticipate it at the end of the summertime into August. This move right here and holding this 382 fib is incredible, believe it or not. This is very, very strong. This is not a bunch of retail just panic selling. This is not unsophisticated looking at all. This is very, very strong support. I mean, since the end of the bull run, it's probably spent over 75% of its time holding the 382 level, around $100. It's almost become like a stable coin in a way. No offense, but it is what it is, right? When it spends so much time trading at the same range generally, with little peaks along the way, but returning right back. Just keep that in mind. Now, we did have a resistance line that was in play for almost a full year, got back tested, and now we're still back to those levels of the initial back test. We have a wolf cross recently, almost 90 days, 3 months. We got a wolf cross. Now we're heading to the downside. We broke some lower lows in the micro. I think this should be coming back down to 85 again. But you got to watch out, man, because the way that an altcoin works is it loves to test the 236 after it tests the golden pocket. So we had buying climax, selling climax, automatic rally into the golden pocket. It's likely to go back to the 236. Okay. So $70 quant, I think, would be incredible. To me, I would consider investing at that point. But for now, I'd be holding off. Yes, it's very stable. It's very strong. But given the amount of gains it's made, I think Bitcoin's outperforming it as we speak. And unless you bought during this very small moment here, like I'm talking about a couple weeks, unless you bought through that, you really didn't do much better on this play than anything else. I mean, a lot of other projects from selling climax to automatic rally have gone up 600, 700, 800%. I know it's not a competition, but we're only up 100 or so percent over the past, we're only up 100% exactly over the past 600 days. So I think XRP might actually be outperforming that given the general range. Again, it's not a competition. I'm just letting you know that this does look good, but I'm not like giving it a gold medal. It's just holding up comparatively to a lot of other altcoins. Now we're going to be moving on to... Oh, by the way, I keep getting people that want me to cover things like XDC and IOTA and HBAR and Algorand. We will cover that when I do the What I'm Investing In podcast. Whoa, what the hell am I looking at? We're looking at Nakamoto Games. This lost all of its value and then gave a horizontal trading range for about 200 days. So it gave you a chance. Holy shit. It's gone up 2,000% from the horizontal trade. What is this thing? And it's just continuing. This is fucking crazy. All right. Let's get it together. Let's get it on the rails. Whoa. I mean, I would look buying climax, selling climax, automatic rally. Here's your, I don't even know. Yeah, this is too much, but it's enough data. Yeah, we got 800 days, multiple years. This is crazy, dude. This is, I think, gonna do what like Solana is about to do. So once it breaks this range and it starts closing dailies below the 618, which is very typical, could break all the way down to this 382 again. And that makes a lot of sense to me because you see here it was holding as a support, but it broke to your selling climax. Then it gravitated back up, rejection. And then once it finally popped above, it back tested and it went continuing very bullish for the remainder of pretty much the following year. Coming back to that level would not be weird. So I would personally look to the 382. I'm going to draw this line across the screen so you can see where I'm coming from with this idea. You have no idea what this project is. It's pretty crazy. Like, where do you even invest in this shit? So yeah, around 30 cents, 30 to 36 cents would make the most sense. That'd be 80% correction. Holy shit. Yeah, this is just so much volatility going on. Yeah, I mean, now one thing to keep in mind, if this thing just wants to keep going bullish like Cass did, you'd look to the 888. And I mean, I don't know if there's a ton of opportunity left in this thing just because of how exhausted it is to the upside. Yeah, we've already started to... Yeah. All right, I can't share too many thoughts on this because I don't have a prior cycle to work with. I just have this type of bear market is almost identical to the way that Bitcoin ended this cycle back here. Let me show you. I'm seeing it right now. Look at this cycle and this bull. This bull vibe, and then moving into the golden pocket. this bull moving into the golden pocket. We know that it did. And then it had a really arduous sell-off followed by a black swan. Lost about 70% of its value. I'm not saying it's going to repeat, but it does kind of look like that. And where Bitcoin back tested was around 382 to 236. And that's the range that this was stuck in for effectively 150 days before it started to move up another leg. So coming back to that region here, the sub 20 cent region is even in the cards. Unbelievable. Yeah, I'm going to leave it at that. This is a really cool thing to see. I haven't looked at this project yet. The logo looks like a cat, like a sideways Bitcoin that's red. We're in the year of the dragon. We know red, orange, yellow symbolism is going to be big for fire, green as well for dragons. Yeah. All right, family. Well, I do have that Year of the Dragon video coming out very soon. Just got to rest my voice a little bit, and then we will have that released hopefully by February 1st. I appreciate every single one of you. Hope you're having a beautiful rest of your day in this matrix. Much love.